because nearly every single emerging market currency is engulfed in this today.
Hi there, Caroline. I mean, we most certainly are in a state of contagion in as much as, you know, those investors that are still toughing it out in emerging markets, and there's still plenty of them in there, are getting whiplashed by markets that really shouldn't be falling. But there are, you know, there are countries that have withstood the contagion, the spread that we've seen from Argentina and Turkey, and you know, some of those countries are places like Vietnam, Romania, some of the smaller frontier kind of markets where you haven't seen quite so much of that sell-off that you've seen in the more liquid emerging markets.
Gavin, so what you define contagion essentially as people throwing the baby out with the bathwater, saying countries that don't necessarily deserve to be getting hammered are getting sold. Who would you put in that category? Who are investors just dumping indiscriminately because they're trying to reduce that EM exposure, even if the fundamentals don't justify it?
Well, we've seen markets across the board falling, and this has been countries that have more stable economic situation, lower deficits, higher reserves. Places like I mentioned, like Vietnam or Romania, to name two of them. But you know, even in the extreme danger zones that we've been talking about, like Argentina and Turkey, there are also some of the securities that are getting crushed. When looking at it rationally, it shouldn't be the case. So Exotics, for example, had a report today that looked at some of the Turkish bond yields. You know, the bond yields in Turkey and Argentina are well over 10%. You know, you look at some of the Turkish bonds, some of the Turkish bank bonds, you can double that yield again. So, you know, looking at Halyk bonds, for example, that are due next year, the yields are over 30% yields to maturity, even though, according to Exotics, they should be amply positioned to pay these bonds as they fall due. And there's other foreign-owned banks in Turkey, like Guarantee Bank, which is backed by BBVA of Spain, another pretty solid bank that also has these sky-high yields. So there's places to be found where even within Turkey and Argentina where you can find some value. But in terms of other countries, you know, some of the better performing markets this year have been places like Mongolia in the frontier market world, Qatar, both of those countries that had serious falls before this year for their own very specific economic concerns and political concerns around Qatar, have been the ones that have stood up better this year.
You mentioned Argentina. We have a chart here that highlights how the peso has weakened and Argentinian dollar-denominated bonds have fallen right alongside of it. The blue line tracking the peso, the dollar versus the peso, the white line tracking these dollar bonds from Argentina. Talk a little bit about what's going on there, because for a while, a couple of weeks ago, it was said that Argentina had its own issues, but it was resolving them the right way, unlike Turkey, with the help of the IMF. Yet, even with the IMF's help, things have gone awry. What does Argentina need to do, or what does the IMF need to do in their approach to set things right again?
Okay, we're going to hear probably in a few hours' time what's decided between the IMF and Argentina's discussions. But, I mean, the problem is that the normal medicine that the IMF would dole out here, and that, you know, Macri as a willing administrator of the IMF program would happily put out, is risks killing the patient. It risks killing Macri's chances of re-election next year, bringing the Peronistas of the left back, and not to mention snuffing out economic growth. So for these reasons, they need to think a lot more creatively, both on the Argentine side and the IMF side, because if there's any feeling that the conclusion of the IMF talks is going to be anti-populist or anti-growth, then markets that would normally take that as a positive signal will act very negatively, because there's then the risk that we have a very negative result come the next few months and into next year's elections. And given the significance of Argentina in terms of, the IMF's very long troubled patience and the contagion risk from Argentina, much more so than we've seen so far. So you look just in Latin America, Brazil with its elections coming up, AMLO in Mexico still very untested. So what Argentina and the IMF really need to come up with is something that is shock and awe, something that is going to be more than the early release of funds. That's sort of the minimum that the market expects right now. What the market would rally on is a sense that the IMF is willing to double down on Argentina and really back it to the hilt.
What about the contagion that we're seeing all-consuming South Africa at the moment? The South African rand down by more than 3 percentage points today, Gavin. Yes, it falls into a surprising recession, but before we had, as was called, Ramaphoria, and that seems to have completely dwindled now with Cyril Ramaphosa's job now looking even tougher as he takes the helm of South Africa. Yeah,
South Africa has taken a surprising turn. For many watchers who did see Ramaphosa as being moved back to more conservative kind of policies, but the land issue just won't go away in South Africa. And, Ramaphosa is bringing that to the fore with his policies. And, we're seeing a lot of discomfort over the way that South Africa could lurch again back to, the kind of struggle that we've seen over the last few months. Ramaphosa is very strong on fighting corruption, but less strong on the kinds of rule of law, the kinds of transparency, the kinds of land rights that most of the investors into the country would like to see in terms of, it's very well recognized that there needs to be land reform, but investors want to see that in a very legal and rule of law kind of way.
Gavin, we've talked about a lot of the various idiosyncratic issues facing different countries and the possible things they could do to address them. On the macro picture, what could change the story? Would it be something in the Fed trajectory, something about the trade war, something to do with China? What could get people to sort of revisit the EM thesis as a whole and bring some confidence back into that trade?
Yeah, the trade war is what kicked this all off. If you think back a few months ago, this is what first started the EM wobble, and add to that concerns over Fed hikes, and you've got the beginnings of what we saw. And Argentina and Turkey were really the first to fall, the first dominoes in this, because they're the most vulnerable. To really bring this back to base, what we got to see is some flow from the strength of the economy, the strength of the markets that we've seen in America spill over to the rest of the world. Right now we have concerns about China's economy. We have concerns throughout a lot of Europe and Africa in the emerging markets. And trade wars aren't helping that. So if we were to see particularly the US and China come to some kind of agreement, then that would send a very positive signal. But just to put this in context, in terms of risk, one of the firms that my consultancy works very closely with is PRS Group in New York, which looks at risk barometers for groups like Transparency International and indicators often cited by the IMF, in fact. And, what you're seeing there is a dramatic increase in risk.
Right.
Argentina moving from moderate risk into almost the high risk category. Turkey already there in the high risk category. These are moves that you wouldn't have expected a couple of years ago.
Absolutely.
When these were